I like how you whoop, whoop.
What is going on YouTube? It's Brendan from Market Makers. Finally got this Thursday video out. Guys, we're going to do a special video today. We're going to focus on just 3 assets. We're going to look at Bitcoin, we're going to look at the NASDAQ and the S&P because there's key trades coming up on all these assets. The last 24 hours, we had PAL. That was the big event, right? PAL, the FOMC, the Fed released a written statement. They did not raise rates, but as we talked about last video, I said, look for them to potentially remove any projected rate cuts from next year, and they took away 2. They had 4 penciled in, they took away 2, and look at the market's reaction. The perverse thing is, I think if Powell would have raised rates a quarter point, the market would have rallied, but he didn't raise, and I think savvy investors read into this that the economy is so weak that he didn't want to risk raising another quarter point. He would rather wait to make a decision on the November meeting to give it more time to see if everything starts to crater. And now we have yields breaking out as we talked about on this channel. And I am not a bond expert, never traded in bonds at all in my life, but we've been talking about for weeks. I saw higher yields coming. Why? Because I understand the cycle, the GFC cycle, whereas the bond experts like Jeff Gundlach, who CNBC loves to have on, was talking about for weeks now, maybe over a month, about being at peak yields. All the people on YouTube, oh, this is peak yields. The dollar's done. The dollar's going to collapse. The dollar spiked up. Yield spiked up. Why? Because of the cycle we are trading, and you guys can take advantage of this, okay? Let's go ahead and jump into this. And we had one other key event that none of you are aware of. Lee, the producer of the show, he's been training really hard to get in shape. And so he did his first race. I went ahead and recorded the last 10 seconds of it just so you guys could see it. And I'm so proud of him. But Lee, go ahead and show him your race. Ah, that's hilarious. All right, let's get into this, guys. Let's look at the VIX, the VIX here. VIX spiked up, finally back above the 50. We'll see how long this holds up. We got to look at the confluence of everything. DXY spiked up as well, retraced some, still holding that higher level here. Remember, our target 106.040 has been our target for weeks and weeks and weeks. Whereas I saw a lot of people on TV that were doing TA and on YouTube. Oh, we're not going to get past this high. Oh, the dollar's done right here. Guys, again, repeating the GFC cycle. Money goes into the dollar, okay? When you cash out of the markets, you have people go long the DXY, people go in money market funds. Ray Dalio, 24th wealthiest person in the world, built his hedge fund, the world's largest hedge fund, from scratch. He said cash is a good place to be. That was a big news story last week. And all these idiots on YouTube are ripping him up saying, oh, I wouldn't go into cash. Well, you know, it looks like he's right so far, doesn't it? So again, repeating this cycle, when will the dollar actually crash down? The dollar will crash down when the equity markets rebound, okay? You're going to have the dollar go up as the equity markets sell off because people are going to go to cash. Let's go ahead and look at the 10-year. Look at the 10-year. Now, again, I have to say this because over here, and this was back in mid-August. This is when Jeff Gundlach, I'm not picking on him. I probably like some of his other views, but he is a professional billionaire bond trader. This is peak yields to him. This is when everybody, some of the big channels like Wealthion, they're bond guys saying, oh, I'm buying bonds here, I'm long, or I'm buying bonds here because this is peak yields. And then look, I've been talking about this for weeks, guys. You're coming up to 4.606. Bigger picture here. Got to zoom out to see this. over here, when we were at this yield level of 4.335, and now we're at 4.48, the S&P here was 3,500, and you're going up from here. More importantly, from a cycle perspective, let's make this a week chart. From a cycle perspective, over here, guys, is the GFC. GFC yields, okay? We're at the base of the double top right now. If we were to repeat the exact same yields before the massive yield curve crash or yield crash here, this got all the way up to 5.28. You see that? This is May of 07, June of 07. 5.28, and then it all fell apart. Okay, so right now we're at 4.48 and testing the bottom of this double top. Now let's look at Bitcoin. I want to focus again. I'm trying to make this video watchable because I know my videos are long, and this is important assets that we want to talk about here, the volatile assets, Bitcoin and NASDAQ particularly, but obviously the S&P, the larger market barometer for what's happening in the marketplace. Now, Bitcoin is holding up better than most assets. Guys, if you like this video, by the way, I should have said this. If you like this content, please do like and subscribe. A lot of people watch my videos. They are not subscribed. It does help in the algorithm. We're approaching 30,000 subs. I would love to get there this year. I think we're what, 700 away. So if you're one of those 700 people that watch but don't subscribe, consider subscribing. Would appreciate it. Let's look at Bitcoin here. And guys, so there's a couple different ways. You know, a lot of the common questions I get in the comments, also on our Discord, are simply like, do you still see Bitcoin going below 10K? Because as you guys know, I had 10.5. We were talking about at the end of 2022, the last quarter, and we got to 15.5 and then rebounded, right? There's a couple key ways you can get projections here, okay? As you know, the next pull down, I'm looking for 12, 13K Bitcoin. But when you look at this just from a Fibonacci pattern perspective and also harmonic waves, we've been over it many times. But when you look at this, the 1272 is at 17.8. Your 1618, okay? Again, from this final wave here, this final wave up could be your wave 5. If you're using a Gann market pattern, it's a 3-wave pattern. Doesn't matter. Your 1618 down here at roughly 4K, 3,800. That would be Fibonacci here. That would be the golden ratio, 1618. But, you know, near term, looking at this from a different perspective, let's just look at the current resistance and current support levels here. And I like to use my impulse move. Okay, this is how I like to do my Fibonacci. And when we look at this, again, this is the areas we're talking about Bitcoin coming to on the next pull down. And I'm going to show you what the trigger is for that, because as you can see, it's still holding its key support at 25K. I want to show you the next trigger for this, but that's the 12,000 number, the 1272. The 1618 is still sub 10K, 6,700. So depending how you pull Fibonacci, that's why I say sub 10K at the end of this thing, guys. Not now, at the end of this, when the recession fully hits, sometime during the recession, depending on the length of the recession, or therefore shortly after, you're going to have sub 10K Bitcoin. Right now, we're looking for the next pull down. That next pull down target I have between 12 and 13K, because again, markets have never bottomed prior to a recession. Bitcoin has never existed in a market bubble. Bitcoin has never existed in an environment where interest rates are 5.5%, 5.25%. It's only existed in 0% interest rates. Okay, so when the S&P loses its support, the NASDAQ, and they pull back down, the triggers for that, that's when you're going to see this decline, which is why we're going to look at those charts next. But guys, so the trade for this, the way I look at this is breaking back below 24,930. Okay, breaking back below 24,930. Any of these levels, obviously, with volatile assets, you can bounce. Sometimes you can bounce substantially, but I'm looking for this move down, but you have to break that 24,930. You have to break it with some velocity. The projections here have been awesome for wave projections. You guys know we've been tracking this very closely. This is harmonic wave analysis. This is not Elliott wave. I don't trade based off Prechter and Frost. Okay, that's a book that's not even based. It's loosely based on the real Elliott wave, but it's their own trading system with a bunch of rules. I don't apply static rules to dynamic markets. Markets are dynamic. They're not static. That's how you get people doing Elliott wave theory, which is not really Elliott wave theory. It's Prechter and Frost's version of Elliott wave, and they've made millions of dollars off of it. But that's how you get these projections out to 250K, and people miss their target by $200,000. Okay. My analysis, the way I did it, Bitcoin was at 65K. I said 10.5, got to 15.5. Again, if it works for you, that's great. If you make money with any system, guys, I advise you to do whatever makes you money. But let's look at this. So again, with my wave analysis, we shorted Bitcoin. Mark in our room, one of our staff traders, posted the short here. It came down, rebounded up. I posted the short here. We came back up to the 1618 at 30,824. Fell back down to the 1 fib again. That's the 25,283. 25K is your key support level. Okay. So the waves have been tracking beautifully here for Bitcoin, but that's what you need to see break is 25K. If you can break 25K in confluence with the markets continuing to sell, you're going to see Bitcoin get to my next number, 12, 13K. It's just going to happen. Believe it or not, doesn't matter to me. You can make money if you decide to trade it when you have the confluencing factors in your favor. Trading is always about probabilities. It's not about definite answers or certainty. Okay. It's about probabilities. So let's look at the triggers because this is the next move to watch. Breaking 25, looking at your key fibs, you can rebound from all the way down, obviously, but the triggers are key and we are approaching them. Let's look at the NASDAQ. How did my wave projections work out in the NASDAQ? We've been over this many times, guys. The 2618, we had harmonic expansion beyond the 1618. This is the NASDAQ on a weekly chart. Look at all that key resistance here. And if you look at the waves, you have your wave 3 up. We got to the 2618, obviously got candles above. Again, this is just forecasting. I use this in confluence with much tighter, smaller time frames, such as the daily, 4-hour, 1-hour charts for looking at trades. But this is forecasting. And you see how accurately it tracked. Okay. So this is my wave projection. I do have this as the wave 5 up. And right now, if this fails, and this is the real thing I want to show you guys here. Let's get rid of this fib. Let's look at where this is going. Okay. Because we're in down markets and people keep asking me about down targets. And obviously we have time to do that. But this is the key setup right here. Do you guys see the shape? Do you see the shape? We talk about it all the time. The massive double top that just formed. Okay. Same thing you topped out with here. Equities love to do double tops. This is the market. This is the big money in the market running the market up in confluence with retail. They flip the switch. They sell it. BTFD, buy the dip comes in. And big money's not participating. They sell it again. They're like, thank you very much. And markets fall 3 to 5 times faster than they rise. And you have to look at this key level here, okay? Let's look at this from a fractal perspective. 14,552. If this level breaks, the first areas I'm looking at here is this. Okay, let's look at this. Right now, you're at the support of the 786. This is the weekly. I think I have this on the daily too. Yeah, we'll go to the daily. But on the weekly here, 14,783, which is where you're at now. If you sweep 14,552, I have us coming down to 13,887. Okay, that's the projected target. And if this gets more, the downturn is more persistent, and this thing really sells off between now, and end of October, then you can see this come to the 2618 at 12,811. And keep in mind, right, the reason we're talking about this here, switch to the daily, pull the same fib so you guys can see this. The reason we're talking about this right now is because we have yields soaring. We have the market coming to the realization Powell's going to stay higher for longer, and you have to look at these targets. This can be life-changing money when this breaks down. You haven't swept this low yet. What does that mean? That means you could do one of these and start rebounding and be in a larger Wyckoff structure for longer. If the market could switch gears, something could happen. The Fed could announce, if we just go sideways here, finding support here at the neckline, the Fed could announce that they are done raising rates. You could see the market go up. You have to be prepared for any of these variables, but the immediate pattern, I highlight it here, if the ABC is your double top, guys, 14,552. If you sweep that, I'm looking for the move down to 13,887. 87, and this is just all pump, okay? So if things are really negative down here, you're going to sweep this and come back down in confluence with your Wyckoff ceiling here and your accumulation here for the Livermore pivot to the breakout to the upside, 12,811. And at any one of these levels, you can have a nice rally back up. And the key thing is, are you making a lower high? Because if you are, you're just making another massive double top structure. You see this over and over again in the markets. The yields stay high. If the DXY gets back on its horse and keeps moving back up, you're going to see this massive double top break. If not, you're going to get chop. You're going to get up and down volatility. Everybody will be waiting for a breakout to the upside, taking out this high, or a breakdown. But let's look at the projections here back on the weekly for targets. So when we talk about where the NASDAQ can fall to, okay, we're going to look at this on the S&P too. Again, different ways you can measure this. You're watching people on TV that have their CMT certification. They do very basic TA, right? Well, so does most of YouTube. Most of YouTube has zero understanding of market cycles, zero understanding of Fibonacci or esoteric concepts, or the fact that the market's a natural, living, breathing organism, right? They're using like Tom DeMark indicators, very static things for a dynamic market. But a lot of people do this, and there's good reason for this. But this is a fib retracement, pandemic low, trillions in stimulus coming into the market. Look at the market fly up. Where did you wick to the dollar? Look at your wick here, right to the 618, 10,503. So the natural thing to suggest would be if the markets never put in a bottom before the recession, and if the 3-month 10-year is hitting its 14-month inversion mark here in December, sometime between December and the first half of next year, January to June, you're going to have that recession actually hit. That's the normalcy of the lags, which is why so many people are talking about, Bob, I see a recession could happen next year. The same people that said it was not going to happen and we're having a soft landing. The soft landing's still the main narrative. And that's the other thing Powell really botched the answer on. Somebody really pressed him on the soft landing and he just really acted goofy. He acted like Biden. He couldn't answer the question. He was fumbling around. He's like, well, I'm paraphrasing, but something to the effect of, that's not our primary focus, but it's a key objective, or some type of verbal diarrhea that he said. It didn't make any sense. And that also shook the permabulls in the market. Guys, a soft landing's never been done. We beat that to death. But the next logical target here, if you sweep this low, is 87.99. Now, other ways you can use Fibonacci here, you go from your market low. Your market low to this, if this remains the high in the pump, and then I'm looking at Fibonacci confluence, okay? You start looking at confluence, where do you have key support? Look at the layering, the 1272 and the 786 right there between 8,800 and 89 or 8,900, 9,000 on the NASDAQ, okay? So this was the area I would be looking at. So let's just call it between 9,000 and 9,500 for the NASDAQ to return to take out this area, okay? To take out the low that it put in. If you notice, at that point, you're back in the pandemic recovery area. Do you see that? You're back in the pandemic recovery area. Now, the interesting thing is when you start scrolling up, look where your 1618 is, 7,021. That's from this impulsive rally up, right? The 1618 is 7,000. Where's 7,000? Lined up almost perfectly with the 6630 from where you pulled the first fib, matching the massive wave 3 up. Okay, again, Fibonacci confluence. And what have I been saying since 2021, end of 2021, all through 2022? You old head subs know this already. When people ask you, when your friends and family ask you, where do you think the markets are going? A, we're going to have a recession. B, you're going back to the pandemic lows. Where in the pandemic lows? Is it exactly 7,000? Is it 7,500? Is it 6,629? Guys, that's been my rule of thumb answer. You're giving up the pump. You're giving up these ridiculous 120+% gains you made in 18 months, which was a massive bubble in confluence with the housing bubble. And realistically, if things get really really bad as in unemployment goes above. Remember, the Fed only has unemployment going to 4.1% over the course of next year. We're at 3.8 now. If you get unemployment above 5-6%, I think we hit 13% in the GFC. Guys, you're starting to talk about much lower targets sweeping this low. We have time to discuss that. But again, my rule of thumb answer based on Fibonacci confluence is going to be the pandemic low area is where all this will come down to. And it's not all coming down based on this one breakdown. Okay. You're going to have potentially massive rallies like we had this year. We had a 40% rally. When the S&P broke down in the 1972 bubble, it fell 64%, the largest break since 1929 crash. And you still had 260+% rallies in that breakdown. So you can get massive rallies, but that's all this ever was a bear market rally. And if you break that level here on your double top, you're going to see this come down, guys. And it's so important if you want to trade this to be realize what's happening here, because these are the types of trades, I don't want to say once in a lifetime, but once every 7 years. Those of you that know, you don't get these types of moves. You have to remember the normal S&P gain prior to the GFC was 6 to 8% a year. Average gain, 6 to 8%. You can get that in a day, okay? Especially when you use leverage in your trades. Guys, if you want to trade the markets, I highly suggest you check out SimpleFX. It supports this channel, and I really would appreciate it. With our link, you do get up to a $5,000 bonus instantly available in your margin, and you can trade with that instantly. It's based on your first deposit, and their UI is absolutely gorgeous. I have a 10-second video for you guys just to see the UI, see the layout. Lee, go ahead and run that for everybody. That's SimpleFX, guys. I think you would love the platform. Most platforms for trading, they use MetaTrader. You can use MetaTrader if you want, but their UI is gorgeous. They have a lot of assets worldwide you can trade. It's fantastic. And again, it helps support the channel, so check them out. BingX for all the cryptos. You can trade Bitcoin and some altcoins on Simple as well. So guys, that's the key trade we're looking at here. 14,552 is where this break could occur on this double top. And if it doesn't happen, it doesn't happen. And you're in a Wyckoff range longer and a distribution top waiting for the breakdown, okay? But these are the key levels to watch. Let's go ahead and look at the S&P. S&P is right there, right at the neckline. And we're going to do an S&P analysis too, but sweeping this fractal low, 43.36. Look where you're at, 43.60. You guys have seen the S&P projections many times now. All of these are lining up basically the same way because the money moves through the markets the same way. And I'm looking at the S&P to come down to where, guys? We've been talking about this for weeks, 42.10. 42.10 is at 43.60. If you take out this pivot to your double top, you're coming down to 42.10. If things are very bad, and I would expect some type of rebound rally, but if things are very bad, guys, I'm looking for the S&P to go to 4,000. Now, remember, we spent a long time in the 4,200 range here, so 42.10 makes a lot of sense to hold as support. But if things turn very bad in the market, if the market just starts panic selling, look for the move down to 4,000. And we need to zoom out here as well so we can talk about the larger S&P targets, the cycle targets for where this is going. I already went ahead and pulled the fib from the pandemic low to the all-time high. The S&P hit perfectly the 486 fib, right? So once again, what's your logical target? You guys have heard me talk about the next pull down, where I think it's going. 32.15, the 618. Do we have confluence for that target at this juncture now that we have so many more candles? Well, let's take the market low and then the high of the rally. And where does this land you? Look at your 618, 1272. They're right on top of each other. 31.41, 32.15. And again, look at the next level down as well. The 1618 and the 786. 27.96. Where does that land you? right in here, guys. Where's this at? The pandemic again. Okay. Once again, you're in the pandemic. Now, my personal target, knowing that in bubble cycles, remember there's norms, there's market norms. Feeling or facts don't care about your feelings. Whether you feel like the market's going to do this, market's going to do that, the facts don't care. It is a fact that average drawdown in a recession is 33% from the market high, not a bubble. Just a recession, a run of the mill, they call them shallow recessions, any recession, the average drawdown is 33%. That alone takes you down to the 618 at 32.15. Look at that. To the percentage point, 33.26. It's the average drawdown. So this seems inevitable. Even if you don't agree with my thesis that we are in a bubble, which you're probably watching the wrong channel if you don't think you're in a bubble. But this is 33%. You're going to 3,200. Okay. Now I know that the average bubble drawdown is what? 50% on the NASDAQ. Okay. So 50% on the NASDAQ from the cycle high. And that brings you down to 2,300-ish. Let's do that. 2,400. That is where is that again? The base of the pandemic. Now, what I particularly think is going to happen, and I've said this number many times, I think you're going to be between 2,000 and 2,400. Why? The market tends to overshoot. In the GFC, the S&P didn't fall 50%, it fell 57%. And the Y2K, it fell 50%, but the NASDAQ went down 84%. So you have to understand these targets in the marketplace. You have to understand the bubble and the amount of money that was involved pumping these markets, and be aware of how to take advantage of these potential opportunities if you do so wish to trade them. Because this right now, as this video is recording, you can see you're approaching your neckline here, okay? And this right now is something that you need to watch, because if you break down, you're coming back down to that lower level here of the channel at 42.10, and that's what I want you guys to watch. All right. What are we at? 25 minutes? Guys, that's where I'm going to end it for. Wait, I'll do one bonus. I'll do one bonus for you because I said this last video so I can pat myself on the back. Last video, where did I tell you I like gold? 1940s. I said right in this range. Where did gold get to? It got to 1947. I think I said 1945. It got to 1947, and now you're at 1918. Guys, again, everybody says, what other YouTubers do you watch? I don't watch anybody if they don't understand cycles. And all of the YouTubers, even the bearish ones that are super bullish on gold, talking about gold going to 3,000, 5,000, it's going to move with the marketplace just like it did in the GFC when gold fell 34%, silver 61%, okay, expressed as Fibonacci. And this exact same thing is happening on this asset. Double top, you see the double top structure. If the markets continue to sell off, and again, they don't have to, but if they continue to sell off, let me show you where gold is going. None of this is like I said, trading is not difficult. Understanding market movements, knowing when to get out of trades, when to take profits, that's the complicated part most traders struggle with. But you're going to 1872 here if you break your double top at 1901. Lose 1900, you're going to 1872. If things got really bad, you're going to 1825. Again, this will be in confluence with the markets. And remember, any of these levels, specifically the 6181, 1618, you can have rallies form, okay? But that's what I'm looking at for gold. So there's your bonus asset. Everybody have a fantastic weekend. I will see you all Monday. If I get my Starlink set up, then I will start doing a live stream at least once a week to replace one of these videos. And maybe I can have Lee join. We can have him race for us. All right, guys, have a good one. Talk to everybody soon.